Hey everyone, welcome to Talk Tickers. This is where we dig into the earnings calls that are really moving the needle. And today, we've got a big one. Dime Community Bank's Q4 2025 results. This was a really important quarter for them.
All right, let's just jump right in. You gotta start with the market's reaction, right? Because really, it tells you everything you need to know. A massive 8.63% jump in just one day. Now look, when a stock moves like that after earnings, that's not just a bit of random noise. That is a verdict. So what did the market see that got it so excited? Well, this was no fluke. It was a huge confirmation that what the company has been doing is actually working. The market saw a bank that was just firing on all cylinders, really pulling away from all the other regional banks that are frankly struggling. So let's get into the nitty-gritty of what caused this.
Yeah, this was what we call a proof point quarter. You know, the kind where a company comes out and just delivers, period, across the board. And remember, this is a really tough environment for banks right now. So for Dime to put up these kinds of numbers, it shows their strategy isn't just working, it's actually speeding up. So first up, get this. A record quarterly revenue of about $124 million. And this isn't some financial engineering or a one-off sale. Management was really clear on the call. This came from good old-fashioned, strong organic growth. And that great top-line number, it flowed right down to the bottom line. Core EPS was up around 15% from last quarter. Now, that's the kind of operating leverage you love to see, right? When revenues are growing way faster than costs, it's the sweet spot for investors. But honestly, here's the number that really blew me away. Core deposit growth of almost $800 million in a single quarter. You have to understand right now, with everything going on, deposit stability is everything. This number signals they have a super high-quality, de-risked funding base. It's a huge competitive advantage. So the big question is, how in the world did they pull off that kind of deposit growth? Well, the answer is actually pretty simple. And you know what? It's incredibly effective. Okay, so management has been saying this for a while now, and they've been crystal clear about it. Their game plan is all about hiring proven, talented teams, not going out and buying other banks. They're building this thing from the ground up, not buying their way in. And this quote from the CEO, Stuart Lubow, it's not just corporate speak. It is literally the core of their entire success story. And here's the proof that it's working. I mean, look at this. Those new teams they brought on board, they've already pulled in over $3 billion in new deposits. And the really crazy part, 38% of that is non-interest bearing. We call that DDA. It's basically free money for the bank to use. That is just fantastic. But you know, that incredible growth is really only half the story. The other, equally important half is profitability. And whenever you talk about a bank's profitability, the conversation has to start with one thing: net interest margin. So DCOM's net interest margin, what we call NIM, it actually grew to 3.11%. And why does that matter? Well, it's a huge sign that they have real pricing power on the loans they're making, and they're being super disciplined about what they pay for deposits. This metric, NIM, it's literally the engine of their earnings. Okay, now this is where it gets really interesting. It's not just about today's NIM. Management has incredible visibility into where that number is going. This isn't just them hoping or guessing. They have a clear, kind of built-in catalyst for higher profits already sitting right there on their balance sheet. So here it is. This is the catalyst. They've got this massive book of old loans. We're talking billions of dollars that are about to reprice over the next 2 years. I mean, just look at these numbers. Over $3 billion in loans are maturing at these low 4-ish% rates. As those loans reset to today's much higher rates, bam, you get a clear, predictable roadmap to a higher NIM. It's why management is so confident in telling us they're targeting 3.25% and then 3.50% after. And all of this brings us right back to where we started, doesn't it? The market's huge reaction. That stock didn't just pop for no reason. It fundamentally re-rated higher because the company went out and proved their story was the real deal. Think about it. The street went into this earnings call just worried about all the big industry problems, fearing the worst for pretty much every regional bank out there. But they came out of this call completely convinced by what DCOM is doing. The company totally flipped the script from being about broad, scary macro fears to being about their own specific, awesome execution. And yeah, this wasn't just a few retail investors getting excited. The stock moved on huge volume, over 1.1 million shares traded hands. That is like 4 or 5 times what it normally does.
That tells you something really important. The big institutions, the big money were piling in. They were scrambling to get a piece of this.
Okay, so that was then, this is now. What matters from here? What do we need to be watching for in the next earnings call to see if the story can keep going?
Right, so for the next call, what we're all going to be looking for is proof that this wasn't just a one-hit wonder. So question 1, can they keep that NIM marching higher, up towards that 3.25% target? 2, was that amazing deposit growth just a one-time thing, or can they keep it going? And this is a big one. Can they keep their credit quality squeaky clean while they're growing so fast? Look, if they can keep checking these boxes quarter after quarter, this stock has a lot more room to run. So, based on everything we've seen, that proven organic growth engine and that super clear path to higher profits, our rating on the stock is outperform. Simple as that. They have a unique strategy, and more importantly, they're executing on it flawlessly, and it's showing up in the numbers. And that brings us to our final thought, the big trade idea here, and it's this. DCOM is making a massive transition. They're going from being just a rate cycle passenger, a bank that just goes up and down with the economy, to becoming a self-help compounder, a company that can actually create its own growth, its own profitability, no matter what the broader economy is doing. The market is just now starting to wake up to this shift, and that to me makes this a potential core holding for anyone who's looking for real quality and execution in the banking space.
This is not financial advice.